Sir, very happy morning to all. So today is the most happiest day because we are going to start a new subject called as advanced accounting. In your group number 1, this paper is there for 100 marks. Sir, how we are going to study this paper? Any subject at A&M classes, we have classified into 5 parts, which is A, N, M, C, A. So we have classified the subject advanced accounting into 5 parts. In that, part A is schedule 3. Schedule 3 means every company have to prepare their financial statements. If every company start preparing their financial statement as per their will and wish, they will be preparing the financial statement one company in one type. Then the users of the financial statement will not be able to compare the financial statements. So Companies Act 2013 said that if you are a company, at the time of preparation and presentation of the financial statement, you have to follow the schedule 3 format. So it should be as per a proper format. You should not prepare as per your ishtam. It should be in proper schedule 3 format. And my dear lovable students, as we all know that financial statement means balance sheet. Financial statement means P&L account. Balance sheet shows the financial position of the company, whereas P&L account shows the financial performance of the company. One more financial statement is cash flow statement. From where the company got the cash, what and all they have done with that cash. That's what cash flow statement. Both are financial statements only. So preparation of financial statement is what? Our part number A. When we prepare the financial statements, everyone should prepare the financial statement in the same way. That means, my dear lovable students, for that we are having accounting standards. When we prepare the financial statement, we will be following accounting policies. What are the accounting policies company has followed? And those accounting policy should be communicated to the users of the financial statement. That's what AS1, disclosure of accounting policies. Disclosure of accounting policies. Because when you prepare the financial statement, sir, on the P&L account or in the balance sheet, I will be writing inventory. This inventory can be valued at either FIFO or this inventory can be valued at weighted average method. My company is having a policy to value the inventory at FIFO. It's my ishtam, it's my policy. But how the users of financial statement will come to know that this value of inventory has been derived by following the FIFO method or weighted average method? So in the financial statement, as a company, you should open your mouth and say to the users of the financial statement that this financial statement has been prepared by following certain rules and regulations. For inventory, we have followed FIFO method or weighted average method. Cash flow statement has been prepared either using direct method or indirect method. Like that, you have to inform the users of the financial statement how you have prepared the financial statement. That's what AS1. AS4 is talking about contingencies and events occurring after the balance sheet date. For example, when I am preparing the balance sheet on 31st of March, there will be some PPE, property, plant and equipment. My dear lovable students, on 15th of April, this PPE would have been damaged or destroyed because of the fire. But only on 30th of April or 30th of May or 30th of June, the board of directors is signing the financial statement. For what date the financial statement has been prepared? 31st March. On 31st March, that PPE was a good PPE. But on the date of approval of the financial statement by the board of directors, actually there is no such PPE at all. That PPE has been damaged or destroyed. If that is the case, there should be some manasakshi should be there with the directors saying that on 31st of March, this PPE was there. Yes, on 31st of March, this PPE was there. But on the date of approval of the financial statement, this PP is not there. So AS4 is saying that if any transaction or event happened after the balance sheet date, but before approval of financial statement by the board of directors, please don't show the PPE as PPE in the books of accounts. Please remove that PPE, P&L account debit to PPE account. Such a journal entry the company have to pass, and they should not show the value of a PPE which was existed on 31st of March but it is not existing on the date of approval of the financial statements. That's what AS4 contingencies and events occurring after the balance sheet date. My dear lovable students, we already said in the introduction that if you are a company, every company have to prepare their financial statements. If every company start preparing the financial statements as per their ishtam, they will be preparing the financial statement one company, one size and one nature. Then it will lose the comparability. It will lose the how to prepare the P&L account is what AS5 is all about. How to present the net profit or loss for the particular period. What and all are ordinary item? What and all are extraordinary item? What and all are exceptional item? What and all are normal item? What and all are abnormal item? All this has been explained in AS5. So AS5 is giving a direction to how to prepare the profit and loss account. My dear lovable students, if the company's name is ANM Limited, ANM is having three divisions. Division A, Division M, Division M. Division A may be taking care of the hardware sector. Division N may be taking care of the software sector. Division M may be taking care of the service sector. Sometimes ANM Limited may think that I don't want to continue the service sector. I just want to discontinue the service sector. How that discontinuance of operation should be presented in the financial statement. That's what AS24. AS24 is discontinuing operations. There is no need that every company have to prepare and present the financial statement only on an year-to-year basis. There are certain company, example listed company, who are forced to prepare their financial statement on a quarterly basis, on a half-yearly basis, on a 9 months basis, or per month basis, or on any basis, my dear lovable students, which the length of the life of the financial statement may be less than 12 months. If that is the case, such a financial statement is called as interim financial reporting. Such a financial statement is called as interim financial reporting. How to prepare, how to present the interim financial reporting is what AS25 is all about. Is what AS25 is all about. So these 5 standards, even though these are accounting standards, these 5 standards teaching us how to prepare the financial statements. So our part A of the subject, advanced accounting, basically talks about the preparation and presentation of the financial statement. Number 1, schedule 3. Number 2, cash flow statements. Then 5 accounting standards. What are the 5 AS? AS1, AS4, AS5, AS24 and AS25. These are the 5 accounting standards which are related with preparation and presentation of the financial statements. We are going to start one by one. In that, the first one is the financial statement of companies. Financial statement comprises of balance sheet and P&L account. Sir, balance sheet, what is the format of the balance sheet? This is the format given by Companies Act. You have to write the name of the company, example ANM Limited. And balance sheet asset, as we all know that P&L account will be prepared for a particular period. That is from 1/4/2000 XX to 31st March 2000 XX. But balance sheet will not be prepared for a period. Balance sheet will be for a particular day. Are you all really with me? That's what balance sheet asset. My dear lovable students, This is the way in which you have to present the financial statement, that is balance sheet. Number 1, equity and liabilities. Earlier, before Schedule 3, we used to say the liability side of the balance sheet and the asset side of the balance sheet. Schedule 3 is saying that it is wrong. It is wrong. Don't say liability side. Say equity and liabilities. Tell me, equity and liabilities. Are you all really with me? Equity and liabilities. Then, my dear lovable students, we have to say the asset side of the what? Balance sheet. So the balance sheet classified into 2 categories. 2 side. Number 1, equity and liabilities. Asset. In that equity and liability, you are having the first classification of shareholders fund. Whose fund? Number 2, share application money pending allotment. Share application money pending allotment. I will explain one by one, don't worry. So first one, shareholders fund. Number 2, share application money pending allotment. Then non-current liabilities. Non-current liabilities. And you are having current liabilities. You are having. That means the liability side of the balance sheet. Basically what and what? Equity and liability should be classified into 4 categories. There are 4 items should be there. If you are not writing like this in exam, you won't get mark. Because this is the prescribed format by the Companies Act. It should be in this format itself. Number 1, shareholders fund. Number 2, share application money pending allotment. Number 3, non-current liabilities and current liabilities. And current. Coming to the asset side, my dear lovable students, you will be having non-current asset. You will be having. And you will be having current asset. You will be having. So these are the main classification of the balance sheet. So I can do like this, man. So the balance sheet mainly classified into how many categories? So the balance sheet can be classified into 2 categories. Number 1, equity and liabilities. Don't say liability side. Equity and liabilities. Equity and liabilities. Am I right? And number 2, asset side. Are you all really with me? Sir, equity and liability, there are 4 main headings are there. Number 1, shareholders fund. Number 2, share application money pending allotment. Share application money pending allotment. Number 3, non-current liabilities and current liabilities. Are you all really with me? The asset side classified into 2 categories. Number 1, non-current asset and current asset. Non-current asset and current asset. Everyone sit straight. Just be with me. Picturize. My dear lovable students. Sir, Schedule 3 balance sheet format classified into 2 categories. Equity and liabilities, assets. Equity and liability further classified into 4 categories. Number 1, shareholders fund. Share application money pending allotment. Non-current liabilities, current liabilities. Right, sir? Come to the next one, man. Asset side. You are having non-current asset. I'm coming, man. Coming to the first classification called as shareholders fund. Shareholders fund. Sir, I am the company, man. In this company, lot of shareholders will be invested their money. So, my dear lovable students, shareholders fund can be classified into 3 categories. 1, 2, 3. Number 1, share capital. Number 1. That means how much number of equity share capital is there? How much number of preference share capital is there? Equity share capital plus preference share capital is what the total share capital. Accepting. So the first one is what? Share capital. First one. Sir, at the time of issuing shares to the shareholders, sometimes I would not have issued at the face value. I would have issued at securities premium. That securities premium will go and sit in the reserves and surplus. What, man? Reserves and surplus. So number 1, share capital. Number 2, reserves and surplus. Number 3, money received against share warrant. Money received against share warrant. My dear lovable students, I am a company. You are shareholder. I said to you that if you want to subscribe my company share in future, today itself you can subscribe, but I will allot the shares to you in what? Future. Give the money to me now. I will be giving you a, sir, evidence called as share warrant. Called as share warrant. In future, this share warrant can be converted into equity share capital. Can be converted into. So, this is potential equity share. What equity share? Potential equity share. In future, this will become equity share capital. That means the face value of the share warrant will go and sit in the share capital, and the security premium will go and sit in the reserves and surplus. Automatically, the C part we can't see in future. The C we can't see in future. That means company and the shareholders have entered into an agreement. Shareholder said that today I have gave money to you. Company said that in future I will give shares to you. Even though the share price increases in the market, no need to worry by the shareholders. Are you all really with me? Sometimes it may be over subscription. Sometimes it may be under subscription. Even though in future, if the company shares are not available also, these shareholders will get the shares from the company. Whereas there are other certain shareholders given their money. But my dear lovable students, I have not issued the shares to them. I have not allotted the shares to them. That is not share warrant. That is what only? Shares only. Look, share application money. What allotment? This is not for share warrant. This is for share capital only. Shareholders gave the money, but I have not allotted. Sometimes I may refund the money. Sometimes I may. That means this may become share capital, may not become share capital. That is why it is having number 2 classification. But this will surely become share capital. That's why it is under C category. Logic clear? That means if it is share warrant, we already entered into an agreement, shareholder and the company. Shareholder gave the money to the company, but now company is not giving the shares. They will give in future, but they will surely give. That means money received against what warrant? Share warrant will become share capital in future. Whereas the second category is share application money pending allotment. I may allot the share or I may not allot the share. If I allot the share, shareholders will get shares and it will become share capital. If I don't allot the share, my dear lovable students, I have to dash the money, refund the money. Are you all really with me? So, come on. On the equity and liability, how many main heading? 4 main heading. Number 1, shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Right? Sir, in shareholders fund, basically shareholders fund means how much the investor have invested in the company. It comprises of A, B, C. What is A? Share capital. What is B? Reserves and surplus. What is C? Money received against share warrant. Right? Sir, these people are potential equity shares. That means in future, this will become share capital. Whereas these people want to be a shareholders, but company has not allotted the shares. Who are those people? Share application money pending allotment. Right? That's it. Till now, we were talking about the shareholders of the company. Now, I'm going to talk about the liability. There are 2 types of liability will be there in the company. Long-term liability and short-term liability. Schedule 3 is not using the word long-term liability. Schedule 3 is not using the word short-term liability. Schedule 3 is using the word non-current liability and current liabilities. The liability may be non-current liability or under non-current liability means long-term liabilities. Non-current liability means, whereas current liability means short-term liabilities. Alright, sir? Sir, A, B, C, D. There are 4 long-term liabilities are there for the company. Or what Companies Act is saying that when you are presenting the balance sheet, all the long-term liability should be, sir, bifurcated into 4 categories. Number 1, long-term borrowings. Long-term. That means companies borrowing from an outsider. Companies borrowing from an outsider. Borrowing. Long-term. That means company may be issuing debenture. Company may be issuing. Is there any need to repay or redeem the debenture within 1 year? No, sir. That means debentures are not short-term in nature. Debentures are long-term in nature. So the first one is long-term borrowing. Long-term. We are having an accounting standard called as AS 22. AS 22. When the class moves, I'll be talking about AS 22. In that, we will be determining deferred tax asset or deferred tax liability. We'll be determining either deferred tax asset or deferred tax. If it is deferred tax asset, as we all know that asset always having debit balance. And deferred tax liability, liability always having credit balance. Liability always having. That liability will be shown deferred tax liability net. Net in the sense means, sometimes, my dear lovable students, I may have 15,000 rupees deferred tax asset and 1,50,000 rupees deferred tax liability. I will be showing 1,35,000 rupees deferred tax liability. That's what this net means. Are you all really with me? Either deferred tax asset will come to a company or deferred tax liability will come to a company. Why deferred tax asset? Why deferred tax liability is what AS 22 is all about. If the company is having deferred tax liability, it should show as B part, deferred tax liabilities net. Sometimes C part, other long-term liabilities. What man? Other long-term liabilities. Sir, under every category, what are the items will come, I will teach you. Don't worry at all. First one, long-term borrowings. Number 2, deferred tax liabilities net. Number 3, other long-term. These are borrowing. Is borrowing liability? Deferred tax liability. Is liability? Long-term liability. Is liability? I will be creating provision. I'll be creating. That provision will be creating as per AS 29. There is one particular accounting standard called as AS 29, which is asking us to create a provision. That provision may be a short-term provision or long-term provision. If the provision you created are long-term provision, then my dear lovable students, that should be presented under non-current liabilities. This is not borrowal. This is a provision which I have created. So the first one, long-term borrowing. That means money what the company has borrowed. Number 2, deferred tax liabilities net. Number 3, other long-term liabilities. Look, first I try to give the main heading, long-term borrowing. Number 2, deferred tax liabilities net. Those who are not fitting under clause A, there is no other way. Miscellaneous, sir, C, other long-term liabilities. I close the liability section. Now I am coming to the provision section. That's what clause D, long-term provisions. Pakka. So what are the 4 long-term non-current liabilities? Long-term borrowings, deferred tax liability net, other long-term liabilities, long-term provisions. Coming to the current liabilities. Current. Any liability which you are not liable to be paid within 12 months is a non-current liability. Any liability which you are liable to be paid within 12 months are called as current liabilities. So, for long-term liabilities, basically non-current liability, what was the A from what you have started? Long-term borrowings. The opposite of long-term borrowings is short-term borrowings. Short-term? My dear lovable students, deferred tax liability is never a short-term item. Deferred tax liability means, as per AS2, difference arises in one accounting period and that difference will settle in another accounting period. That means it will go more than 12 months. So it will never be categorized under the current liability category. Are you all really with me? Hence, the second part, deferred tax liability net, will not be applicable. Will not be. What was the third item there? Other long-term liabilities. For current liability, trade payable is the next one. And we have to present the trade payable, that I will come. Trade payable. That means instead of deferred tax liability net, we have to write the what payable? Trade payable. What was the third one? Other long-term liabilities. Here, other current liabilities. I'm going to close the section. Sir, there, what we have kept fourth one? Long-term provisions. So here what should come? Short-term provisions. My dear lovable students, that means I'm coming, man. Just be with me. Balance sheet can be classified into two categories. Number one, equity and liability assets. Please picturize. Equity and liability, mainly how many classification? Four classification. Shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. In that shareholders fund, it is schedule 3 classified into 3. Are you all really with me? Number one, share capital, reserves and surplus, money received against share warrant. Money received against share. This will become share capital in future. Are you all really with me? So the first classification, shareholders fund, can be classified into 3 categories. What is the second one? Share application money pending allotment. Share application money pending allotment. No further classification. That's it. My dear lovable students, the third one is non-current liabilities. And the fourth one is how it will move for non-current liabilities and current liability. It is like, my dear lovable students, A, B, C, D. There are 4 items are there. In A, it is what? Long-term borrowings. Here it is short-term borrowings. The opposite of long-term borrowing is short-term borrowings. Clarity? Next one, as per AS 22, that means it is 2. So second one, 2. AS 22. That's why it is second item. Deferred tax liability net. At any cost, deferred tax liability will not be a current liability. Because deferred tax liability means a liability arising in one financial year and knock off in another financial year. So it is more than 12 months. Anything within 12 months only, current liabilities. Hence, I have to replace the deferred tax liability net with trade payables. Because trade payables are payable, amount payable to creditor within 12 months. Right, sir? I want to close the long-term borrowing sections. What I will do? Other long-term liabilities. What you started? You started with the long-term borrowings. I'm not writing other long-term borrowings. I'm writing other long-term. That means which include borrowing, which include liability. Everything will be included because it's a miscellaneous item. So other long-term liabilities. Other long-term liabilities. Corresponding one. Other current liabilities. What is the corresponding one here? Other current liabilities. Pakka? Now, sir, borrowing is over, liability is over. Coming to the provisions. 2 type of provision. If the provision is valid for more than 1 year, long-term provision. If provision is valid only for 12 months, short-term provisions. Are you all really with me? That's it. This is the liability side of the balance sheet. Can we picturize? How many main item? 4 main item. Number 1, shareholders funds. Tell me, man, shareholders fund. Share capital, reserves and surplus, money received against share warrant. Number 2, share application money pending allotment. Don't repeat with me, picturize with me. Then 2 columns, you should not picturize like this. What column? What column? Non-current liabilities, current liabilities. A, B, C, D. A. Long-term borrowing, short-term borrowings. Deferred tax liability net, the replacement trade payables. Then other long-term liabilities, other current liabilities. Long-term provision, short-term provisions. Pakka? That's it with regard to the liability side of the balance sheet. Coming to the asset side of the balance sheet. We are having two assets. Number one, non-current asset, current asset. In that non-current asset, number one, PPE. Number one. Sir, PPE, property, plant and equipment. What is PPE is explained by AS10. Is explained by AS10 only talking to us what is PPE. Sir, number two is intangible asset. Number two is what? What is intangible asset? Is said in AS26. Is said in AS capital WIP. Capital. That means I'm constructing a building, but building is not fully over. So it has not become the PPE, but it is going to become the PPE. That is called as capital. Work in progress. Are you really with me? Sir, intangible asset under development. My dear lovable students, if you study AS26, there we will be studying two phases will be there. Number one, research phase and development phase. A research phase would have over, but it is in the development stage. When it is in the development stage, then we will show as intangible asset under development. That means tangible asset, intangible asset. Tangible asset under construction, intangible asset under development. That's it, game over. That's what? 1, 2, 3, 4. It's not ABCD. Under A, sir, all the non-current asset I should show. In the non-current asset, I should say PPE, intangible asset, capital WIP, intangible asset under development. Right? Sir, as a company, I may be investing in another company. Am I right? That investment is called as non-current investment. That investment is called as this investment will be studying in AS13. Investment accounts will be there. Sometimes, my dear lovable students, I may be a holding company and I may be have a subsidiary company. If that is the case, we will be studying AS21. My dear lovable students, sometimes I may be a company and you may be my associate. You may be my, then AS23 will be applicable. I may be a company and you may be my joint venture. Then AS27 will be applicable. In the coming slots, we'll be talking about investments. That investments are non-current investment. What investment? There is no need that every company should have deferred tax liability. Certain company will be having deferred tax asset. If that is the case, my dear lovable students, that deferred tax asset can never be a what asset? Current asset. Because deferred tax asset means difference arise in one financial year and it's set off or adjusted in another financial year. That means more than 12 months. It can never be a current item. It should only be a non-current item. That's what deferred tax asset net. Deferred tax asset net. Sometimes, my dear lovable students, me being a company, instead of investing as share capital in your company, I may give loans or advances to you. That's what long-term what or what. I try to classify my level best. Still, any long-term items are pending. Other non-current asset. Other non-current asset. Are you really with me? So, my dear lovable students, we are going to talk about the what side? Asset side. Sir, the asset side classified into two category. What asset? What asset? Non-current asset, current asset. What are non-current asset? Any asset having a life of less than 12 months are, more than 12 months are non-current asset. Any asset who are having a life of less than 12 months are current asset. Asset. How many category? A, B, C, D, E. Total 5 items. So A, B, C, D, E. What is A? A comprises of 4 items. I am just attaching below, which is nothing but A should be classified into 4 category. PP means property, plant and equipment. Then intangible asset. Then capital work in progress. Intangible asset under, don't say under construction, it is under development. Under development. Two stages will be there. Research phase, development phase. So under development, right? So this is the classification of A. We can say it as below. That's it, man. All the tangible item, all the intangible item, all the capital WIP, and also the intangible asset under development, I have notified. Next one, number 2. Non-current investment. Non-current investments. Right, sir? My dear lovable students, if I am having lot of money, I will try to invest in my business. First, I will invest in my business. Where and all you will invest in your business? In PPE, you will invest. In intangible asset, you will invest. Capital WIP, you will invest. And intangible asset under development, you will invest. That's what the first investments, first non-current asset, you will create asset for your own business. Still, you are having lot of money. Will you do it? Sir, will you put it on dustbin? Sir, the B, you will be investing in with other people's business. That's what non-current investments. Still, I am having lot of money. I'll give to government, which is deferred tax asset net. That means, my dear lovable students, next year tax I paid in this year itself. So it's an asset for me. It's like an advance tax. Advance tax paid is an asset. Am I right, sir? That's what. So I'm having lot of money. I invested in my business, a various sector. I invested in other people's business. Now I invested in government also. ABC done. Are you all really with me? Sir, still I am having lot of money. I will give loans and advances to the other people. That's what long-term loans and advances. Long-term loans and advances. Still I am having lot of money, man. I want to close it. Other long-term non-current assets, which are long-term in nature. Other non-current assets. Right, sir? So 5 investments I will make. I will invest in my own business. I will invest in others' business. I will invest with government. I will give loans or advances to others and the balancing figure. Are you all really with me? So you try to picturize what are the A, B, C, D, E. What is A? PPE, intangible asset, capital WIP, intangible asset under development. B, non-current investment. C, deferred tax asset net. D, long-term loans and advances. E, other non-current asset. Right, sir? Coming to the current asset, man, opposite. Sir, what is the first one? PPE, which are long-term in nature. Intangible asset, which are long-term in nature. Then, capital WIP, which I am constructing building. Sir, intangible asset under development. All these are what in nature? Long-term in nature. Long-term in? If still I am having sufficient money, I will invest in others' business. That's what investment? Sir, this is current investment. What investment? Because in current asset, the first thing will be current investment. Current. Okay, fine. You are going to invest within 12 months. These are investment having a life of more than 12 months, which are A, B, C, D, E. What is order of investment? Try to invest in my business. Still money is there. Try to invest in others' business. Still money is there. Try to invest with government. Still money is there. Try to give loans or advances to others. Still money is there. Other non-current asset. Now I am going to make the current asset. Current asset. Current means, my dear lovable students, having a life of less than 12 months. Having a life of less than. That means first, this is what asset? Current asset. So first make the dash investment. Sir, you are doing business. In order to do the business, you have to sell the inventory. Am I right? Then you have to invest in what? Inventory. Sir, once you invest in inventory, you will sell the inventory to whom? Debtors. Then that debtors is called as trade receivable. Then the debtors will pay us. That's why you will be having cash and cash equivalent. If you are having cash and cash equivalent, again you will invest. What you will do? You will give short-term loans and advances, right? And you will be having the other current assets also. Are you all really with me? So you will be having long-term investments and short-term investments. Long-term investment, first you will invest in your company. Then you will invest in other people's business. Then you will invest with government. Then you will give loans and advances. And the balance will be the other non-current asset. Am I right? Sir, next one is short-term investments, which are what asset? Current asset. First you will make current investment. Then you will buy inventory. You will sell to trade receivable and they will pay you cash and cash equivalent. With that cash and cash equivalent, you will give short-term loans and advances and the balance will be the other current asset. That means here for the non-current asset, it will be like A, B, C, D, E and F will not be there for the non-current asset. Whereas for what asset? Current asset. Sir, current asset means an investment for a life within 12 months. First, what you should do? You make the current investment. Am I right, sir? Sir, current investment means investment having a life of less than 12 months. My dear lovable students, the next one. Inventories. That's the second, number 2, second item. Second investment. Second one, AS2. Second one, inventory. Sir, what you are going to do with the inventory? You have to sell. Then who will come? Don't say debtors. Debtors is not the word used by Schedule 3. Trade receivable. Trade receivable. Sir, those debtors have to pay you. Then you will be having cash and cash equivalent. Cash and cash equivalent. With that cash and cash equivalent, you will give short-term loans and advances to various other people. The balancing figure. Other, that's it, game over. Are you all really with me? Other current asset. You will get the balance sheet total. My dear lovable students, Schedule 3 balance sheet can be classified into how many categories? 2 categories. Number 1, equity and liability assets. Equity and liability can be classified into 4 categories. Number 1, shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Whereas asset, non-current asset, current asset. Can we come one by one? Shareholders fund, which is 3 things: share capital, reserves and surplus, money received against share warrant. Clear? Next one, share application money pending allotment. Sir, for them we have not issued anything. We may issue share, we may not issue. But the above category we issued share warrant. Pakka. Next one, non-current liabilities. That means non-current means long-term. Non-current means there are how many long-term? 4 long-term. 4 or 5? 4. Hello, sir. Number 1, long-term borrowings. I borrowed from particular person, which are long-term in nature. Deferred tax liabilities net. That means I am liable to pay to government in future, which is payable to government, but that liability I am not liable to pay now, which is having a life of more than 12 months. That's what deferred tax liability net. The next one, other long-term liabilities. I'm closing. Then I'm coming to the provision, which are long-term provisions, right? The opposite of long-term liabilities are short-term, which we'll call it as current liabilities. How many current liability? It is just the opposite of the long-term in nature. Long-term borrowings. Here, short-term borrowings. Sir, deferred tax liability net will never be current liability. Hence, we have to replace with an item, trade payables. Then there, other long-term liabilities, other current liabilities, long-term provision, short-term provisions. That's it. Liability side comes to an end. Coming to the asset side. Asset means, sir, 2 types of asset. Non-current asset, Non-current means long-term assets. Long-term, first I will invest in myself. PPE, intangible asset, capital WIP, intangible asset under development. Right? Still I am having lot of money. I will invest in others' business. Non-current investments. Still I am having lot of money. Deferred tax asset net. Still I am having lot of money. Loans and advances. Still I am having lot of money. Next one, sir, current asset. Current asset means short term in nature. First I will make the current investment. Have you started business to make the current investment? No, sir. You started business for doing business. Then second one is to buy the inventories, sell the inventory and convert the inventory into trade receivable. You will get cash and cash equivalent. Then with that cash and cash equivalent, you can short-term loans and advances. And the other, my dear lovable students, when you are preparing the balance sheet, these are the general instruction for preparation of the what? Balance sheet. Which is nothing but instruction number 1. An asset can be classified as current when it satisfies any of the following criteria. Criteria number 1, criteria number 2, criteria number 3, criteria number 4. Out of this, how many criteria? 4 criteria. If any one criteria has been satisfied, don't classify it as non-current. Classify it as current. Current means, sir, any asset having a life of less than 12 months. My dear lovable students, it is expected to be realized in or it's intended to sale or consumption in the company's normal what cycle? Operating cycle. That means within next 3 months, within next 6 months, I will get money from debtor. It's not long term. It is short term. Don't use the word long term, short term. It's not non-current. It is current. Pakka? It is held primarily for the purpose of being what? Traded. That means I will buy the stock, I will sell the stock. Sir, then it should be treated as current. It is expected to be realized within how much? 12 months after the reporting date. That means from 31st of March, within 12 months, I will get the money. That means it will be treated as current. It is cash or what? Cash equivalent. Unless it is restricted from being exchanged or used as settle a liability for at least how much month? 12 months after the what date? Reporting. Generally, cash and cash equivalent are current asset and not the non-current asset. That means if this 4 criteria, any of the 1 criteria satisfied, please try to classify as current. What are the criteria? Number 1, in the normal operating cycle itself, I will realize or I will use. Or it is primarily for the purpose of being traded. So it is expected to be realized within 12 months. It is cash and cash equivalent. All other assets shall be classified as non-current. Simple. If any of the 1 criteria it is satisfying, then it is current. All other things are non-current. Easy. So this is the decision-making benchmark to treat an asset as a current asset or a non-current asset. Current asset or a? Instruction number 2. Sir, you only said that it is expected to be realized in or intended to be sale or consumption in the company's what cycle? Normal operating cycle. Normal? Sir, what is normal operating cycle? An operating cycle is the time between the acquisition of asset for what? Processing. That means I purchased a asset for what? Processing. And their realization in what or what? Cash or cash. That means I will be converting the raw material into finished goods. I will sell the finished goods to my debtor. Debtor will pay money to me. That is called as 1 operating cycle. How much time you are taking for this? Sometimes today I am purchasing raw material. I am converting the raw material into WIP. WIP is converting into finished goods. Finished goods I am selling to debtor. Debtor is paying me cash. That's it. That means 1 cycle has been completed. Where the normal operating cycle cannot be determined. If you are, as a company, is not able to determine the normal, it is assumed to have a duration of 12 months. We will assume that the duration of that operating cycle is 12 months. This is what instruction number 2. This is very important because we are preparing the balance sheet. In balance sheet, we are having two sides, equity and liability and asset side. Under asset side, we are having only two items, either non-current asset or current asset. So we should know which item to be placed under non-current asset and which item to be placed under current asset. That is based upon 4 criteria. If it satisfies any of the one criteria, sir, please park it under the current asset and don't park it under the non-current asset. In exam, they may test. What are the 4 criteria? Sir, it is expected to be realized in or intended for sale or consumption in the company's normal operating cycle. It is held primarily for the purpose of being traded. It is expected to be realized within 12 months after the reporting date. Or it is cash or cash equivalent. If any of the criteria has been satisfied, that item should be classified as current asset and should not be classified as non-current asset. So I got the answer. Now I'm moving into the liability side. Under liability side, shareholders fund, I don't have doubt because share capital will come, reserves and surplus will come, money received against share warrant will come. Number 2, the second one, share application money, pending allotment will come. These all are settled, predetermined, prefixed item. But what and all are non-current liability and current liability? If there is a Nyaya Dharmam for current asset and non-current asset, same Nyaya Dharmam should be there for that. That's what instruction number 3. A liability shall be classified as current when it satisfies any of the following criteria, which will be opposite of the what asset? Current asset. It is expected to be settled in company's normal operating cycle. I am liable to pay to my creditor within next 3 months. Then that trade payable should not be non-current liability. Trade payable should be current liabilities. Criteria number 1. Number 2, it is held primarily for the purpose of being traded. Sir, because of the trading activity only that liability arises. Debenture liability does not arise because of trading. But bills payable arises because of trading. Sundry creditor arises because of trading. If that is the case, you have to classify as current liabilities. It is due to be settled within 12 months after the what date? That means from the balance sheet date, within next 12 months, I have to mandatorily pay off that liability. Then that liability is a current liability. But if I have taken any bank loan and that bank loan may be a term loan, that term loan may be for next 5 to 7 years. Is there any need that from the balance sheet date within 12 months you are supposed to pay off that? No, sir. Then it is not a current liability. It will be treated as a long-term borrowing. It will be treated as a... And company does not have any unconditional right to defer settlement of liability for at least 12 months after the what date? Reporting. Sir, I don't have the right to pay. Simply, terms of settlement has not been mentioned. When I should pay, it is not there. But I cannot defer more than 12 months. I have to pay within 12 months. I have to pay within. For example, sir, dividend payable. Sir, dividend, 31st of March, they will not declare the dividend. Only on AGM, they will be declaring the... Once they declare the dividend in AGM, is there any statutory date for payment of dividend? No. But there is no end date also. For that reason, I can't defer that to more than 1 year. Before completion of the next year, I have to pay the dividend. So, company does not have unconditional right to defer settlement of the liability for at least 12 months after the what date? Report. Terms of liability that could at the option of the counterparty result in its settlement by issue of equity instrument do not affect it what? Classification. That means there is no specific time limit, but still I am supposed to pay within 12 months. Then that liability should be treated as current liability. All other liabilities shall be classified as non-current. Right? My dear lovable students, this is the base format of the schedule 3. That means the format, the liability, sir, balance sheet should be classified into 2 categories. Number 1, equity and liability and assets. Under equity and liability, you are having 4 classification. Shareholders fund, share application money pending allotment, non-current liabilities and current liabilities, right? Under shareholders fund, what and all will come? Share capital, reserves and surplus, money received against share war. Share application money pending allotment. That means share application money pending allotment. Third one, non-current liabilities and current liabilities, which is A, B, C, D. Long-term borrowing, short-term borrowing. Deferred tax liability net, trade payable. Other long-term liabilities, other short-term liabilities. Long-term provision, short-term provisions. Are you all with me? Then, asset side, you are having 2 things. Non-current asset, current asset. Non-current asset means I am investing for long-term. Right? First, I will invest with myself, such as PPE, intangible asset, capital WIP, intangible asset under development. Still I am having money. Non-current investment. Still I am having money. Deferred tax asset netted. Still I am having money. Long-term loans and advances. Still I am having money. Other non-current asset. Now I am going to make the what asset? Current asset. My dear lovable students, for current asset, I will first make the current investment. I will invest in inventory. It will become trade receivable. It will become cash and cash equivalent. It will become short-term loans and advances. And it will other current asset. Right? We are having 4 criteria to treat an asset as a current asset. It should be recovered within normal operating cycle. It should be mainly for being traded. And it should be able to realize within 12 months. It should be either cash or cash equivalent. The opposite. Sir, it should be payable within normal operating cycle. And it should be primarily for the purpose of being, it should be settled within, even though, sir, we don't have a separate cut-off date for payment. We can't defer the payment more than 12 months. If any of the criteria, not all the 4, if any of the criteria has been satisfied, then my dear lovable students, it will be treated as Pakka. That's it in the introduction slot. In the coming slot, my dear lovable students, we will be talking about what is the first one, shareholders fund. In that shareholders fund, we are having share cap. What are the items should come under share capital? What are the disclosures? Then question related to that. The next one is what? Reserves and surplus. What are the items will come under reserves and surplus? And the questions relating to that. Next one, as per our classification, money received again, share warrants. Nothing to discuss. That's it. Next one, share application money pending allotment. Nothing. Next, main major classification. Non-current liability and current liability. Under non-current liability, what and all the items should be classified under long-term borrowings. That means we have not ended. We are starting. Hello, sir. Then other long-term liabilities, long-term provisions, short-term provisions. That means item by item will be explaining other current liabilities. What are the items? Short-term provisions. Hello, sir. Property, plant and equipment, PPE, which will comprise of what and all? Intangible assets. Then non-current investment. What does it mean? Then, my dear lovable students, long-term loans and advances. Then other non-current asset. Then we are having current investments. Then we'll be talking about inventories. Then we'll be talking about trade receivables. Then we'll be talking about the next one, cash and cash equivalents. Then we'll be talking about short-term loans and advances. Then we'll be talking about other current asset and contingent liability will be there. Once we discuss each and every item of the balance sheet, we can enter into the statement of the P&L account. Are you all really with me? We'll be looking at what is the format of the P&L as per schedule 3. Even in P&L, what are the individual item one by one. With this background, if you entering into the sums, you will be able to appreciate or understand the sums in a very, very better way. Otherwise, you will feel this as a format and you will never able to tally it. Before we start doing the question, the important adjustments point to be kept in mind while preparing the financial statements. That means nearly 20-25 adjustments. We will be first discussing the special adjustment, then we will be start doing the questions. Are you all really with me? Sir, these are the special. Then we will enter into the question for practice. You may have a doubt. Sir, is schedule 3 a theory part or a problem part? Pure problem. It should not be a problem. If it should not be a problem, we should give 3 to 4 hours of the introduction. If you pakka done that 3 to 4 hours, then this chapter 14 mark will comes to an end. The remaining is just a cakewalk. What you are supposed to do, you have to write the format 3 times before you come to the next slot. Are you all really with me? That means the main part, balance sheet classified into 2 categories, equity and liabilities and asset. Equity and liability should be classified into 4 categories, shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Then here, non-current asset, current asset. Under every category, we are having bifurcation. That you have to write in the chart format for 3 times. Come to me, will be adding more and more and value. Every session will be repeating those parts. You will be feeling so much comfortable. Sir, I'm with you, sir, from your heart. Anybody is there? Where is a grand clap?